Hello everyone, I welcome you all to my YouTube channel Commerce Treasure, where we discuss various commerce related MCQs and commerce related topics. In this video, I am going to discuss about KUD Mcom PG Entrance Examination Paper 2023. These are the expected key answers and not the final answers. Final answers will be uploaded by the university in the KUD website. So without wasting much time, let us go to the detailed discussion of the questions which were asked for the 2023 exam. Question number 1 is the principle of management which decides the number of employees working under an executive is known as unity of command, span of control, organizational structure, none of these. So principle of management which says that number of employees working under a single executive, this is called as span of control, which is option number B. More the number of employees, bigger will be the span of control, less the number of employees, lesser will be the span of control. Unity of command is nothing but whenever only one supervisor gives instruction to the subordinate, that is called as unity of command, which is one of the 14 principles of management given by Henry Fayol. The second question is an organizational structure divides the work of responsibility on the basis of specialization is termed as functional organization, matrix organizational structure, line and staff organizational structure, none of the above. So whenever you divide the organizational structure on the basis of specialization, then it is called as functional organization, which is option number A. It may be marketing manager, it may be HR manager, finance manager, production manager, etc. So these are functions. Therefore, it is called as functional organization. In metric organization, the structure is more complex, where there will be multiple small structures. In line and staff organization, usually the work of the staff is to advise and the work of the line is to actually perform the work or to achieve the goal. And line organization is the simplest form of organization where just authority flows from higher level to lower level like a military form. The next question is the concentration of decision making authority at a high level in management hierarchy is considered as centralization of decision making, decentralization, delegation, none of the above. So whenever the decision is taken by the higher level or the top level, then it is called as centralized decision making or centralization. Decentralization is nothing but whenever you give the authority to the subordinates to make own decisions, then it is called as decentralization. Investment in overseas country is considered to be risky for the reasons of political risk. Definitely there will be political risk, of government, legal risk. Again, different countries have different laws, so there will be legal risk, and tax issue will also be there because each country has their own tax structure. Therefore, all of the above should be the right answer for this question. Environmental scanning is a method of studying the environment before start of the business, entry into foreign markets, merger and acquisition, all of the above. So if you see the options, before the start of the business, definitely we have to use environmental scanning. Before entry into foreign markets, you can use environmental scanning. Merger and acquisition, no such evidences are found. Most appropriate answer is option number A, that is before the starting of the business. A probable answer can also be option number D, that is all of the above. But if you have to select the best answer, then it is option number A. So let us wait for the university to get the correct answer. 25 radio sets out of 100 sets sent on consignment basis remained unsold. The consignment price is rupees 1000 and rupees 10,000 expenses were incurred directly. The unsold value will be, so you have to find out the value of unsold goods. So total they are bringing 100 sets and the price of each set is 1000. So the total amount is going to be 1 lakh plus 10,000 is going to be the expenses. So 1,10,000 is the total cost of 100 sets. Now 25 are remaining in stock. So you have to find out the value for that 25 radio sets. So 1,10,000 into 25 divided by 100, which will give you 27,500 rupees, which is option number C. A plant was purchased for rupees 1 lakh on 1/4/2020 and for 50,000 on 1/4/2021. There were no sales of plant and was depreciated at 10% per annum. The value of the plant on 1/4/2023 will be. So on 1/4/2020 the value was 1 lakh rupees. So less depreciation for that year, that is on 31st/3/2021 at 10%. Depreciation is going to be 10,000. So return down value or the remaining value on 1/4/21 is going to be 90,000. Then in that year additions were made of how much? 50,000. So let us add 50,000 addition. It comes to 1,40,000, and depreciation let us reduce for that particular year. So depreciation will be again 10%, which is 1,40,000 into 10%, which comes to 14,000. So if you deduct, you get 1,26,000. This is the written down value on 1st of April 2022. We have to find for 2023. So again less depreciation at 10%. If you do 12,600, you have to deduct, which will give you 1,13,400 rupees, which will be the written down value on 1/4/2023, which is option number C. The total amount of those installment in respect of goods sold on hire purchase which are to be received in the next accounting period are known as installment due but not paid, no. Installment not yet due, yes. So option number B, installment not yet due, is the correct answer for this question. A colliery company pays rupees 10,000 as annual installment at 10% interest towards the purchase of machinery for 5 years. The present value factor is 3.791. The present value of cash price will be. So 10,000 rupees it is paying as annual installment, and for 5 years it is paying. The present value you have to find out. Present value factor has been given, that is 3.791. So if you multiply, you get 37,910. That is option number A as the correct answer. System where the head office maintains a number of account for keeping a record of branch transaction in one place of one branch account is known as. So whenever a head office is maintaining separate accounts for each transactions, then it is called as stock and debtor system, which is option number B. So here different accounts like branch stock account, branch expenses account, branch adjustment account, etc. are going to be prepared. In case of debtors system or debtors method, separate branch account will be opened for each branch. Usually it is used for small sized branch, and in case of final account system, you prepare the trading and profit and loss account to find out the profit or loss, just like a personal account for the particular branch. The ratio of capital of partner is 1:2:2. The first partner is insolvent and the deficiency in his account is rupees 20,000. The loss borne by the solvent partner is rupees 10,000 each, 8,000 each, rupees 20,000 by second partner, rupees 10,000 by the third partner. This is a case of Garner versus Murray rule. So here what is happening, one partner, that is the first partner, is becoming insolvent, so his share will not be considered. Now his deficiency in the account is rupees 20,000. Now this 20,000 rupees, as per Garner versus Murray rule, has to be divided among the old partners or the remaining partners in the capital sharing ratio, which is 2:2. If you further simplify, it becomes 1:1. So this 20,000 rupees has to be divided into two partners in the ratio of 1:1, which will give you as rupees 10,000 and 10,000, which is option number A. When loan due from customer is outstanding for more than 3 years, it is regarded as. So NPAs as per RBI are classified into 3 different types of assets. First one is called as standard asset, which are the loans given to the persons who are paying the interest regularly. So these are good assets. Second is substandard assets. So these are the loans of the customers who are not paying their interest from the last 12 months. So if the amount is not being received in the last 12 months or within last 12 months, then it becomes a substandard asset. Now if the amount is not paid by the bank customers for more than 12 months, then it is called as doubtful asset. So doubtful asset should actually be the answer for this question. So therefore the most appropriate answer for this question will be loss assets. Loss assets are the assets which are classified by the bank auditor as those on which interest or neither the principal amount is being repaid by the customer. When amalgamation is in the nature of purchase, the accounting method apply is accounting entry method, no. Pulling of interest method, no. This is done when the amalgamation is in the nature of merger. Net asset method, no. Again this is for amalgamation in nature of merger when you compute purchase consideration. So purchase method is going to be the right answer for this question. The super profits of a company are rupees 1,20,000. Value of goodwill is 3 years of purchase. Then the value of goodwill will be, so value of goodwill is computed with the formula super profits into number of years of goodwill. So super profit in this case is 1,20,000 and value of goodwill is 3. So 1,20,000 into 3, that is 3,60,000 is the value of goodwill for this question. The next question is X Limited has earned rupees 10 lakh and it's managed by only part-time directors. The maximum remuneration payable as per the law to such director is rupees 30,000, 50,000, 1 lakh, 10,000. Now the rule says maximum amount of remuneration to be paid to all directors together is 11% of the net profit. Now there are some small rules which you have to remember. First rule, if the company has a managing director, then it has to pay 5% maximum to the directors. If the company has 2 or more managing director or whole time director, then maximum it can pay 10% to all the directors. But in this question they say that there is no managing director nor whole time director, only part time directors are there in the company. So whenever such situation happens, then the maximum remuneration can be paid to the director is 3% of the net profit. So 10 lakh rupees into 3% if you do, you get rupees 30,000, which is option number A. Now in case there is a managing director, then you can pay only 1% of the net profit to the part-time directors. So this is all about the first 15 questions. If you have any doubts regarding to these questions, you can comment me in the comment box. If you like the video, please hit the like button, and if you haven't subscribed my channel yet, please subscribe my channel and also press the bell icon so that you can get a notification as soon as I upload a new video. Thank you for watching this video, and we shall meet again with another video.